DOMS strengthens market leadership after completing Reynolds brand acquisition. DOMS Industries has officially completed one of its most significant strategic acquisitions by taking over key assets related to the iconic Reynolds brand. The transaction marks an important milestone for the company as it looks to strengthen its position in India's highly competitive writing instruments and stationery market. The acquisition was first announced in June 2026, but the company has now confirmed that the transaction has been successfully completed on July 1, 2026. With the closing formalities now complete, DOMS can begin integrating the acquired business into its existing operations. The total cash consideration for the acquisition stands at $3.7 million United States dollars, excluding the value of inventory. While the transaction size may not appear very large compared to some corporate acquisitions, its strategic importance could be much greater than the financial value suggests. Rather than purchasing an entire company, DOMS has acquired selected business assets associated with the Reynolds brand. These include intellectual property, manufacturing-related assets, relevant commercial contracts, identified liabilities, and employees connected with the business. The acquisition specifically covers products such as pens, markers, highlighters and school supplies that are sold under the Reynolds brand. These product categories already represent one of the largest segments within India's stationery industry. Reynolds has remained one of the most recognizable writing instrument brands in India for decades. Generations of students, professionals and officers have been familiar with products like the Reynolds 045 pen, making the brand one of the strongest names in the industry. By acquiring these assets, DOMS is not simply adding new products to its portfolio. Instead, the company is gaining access to a well-established brand that already enjoys strong customer recognition and widespread retail presence. Brand acquisitions often provide a faster growth path than building new brands from scratch. Instead of spending years creating customer trust, companies can leverage existing brand equity while introducing operational improvements and wider product availability. Another important aspect of the transaction is the transfer of intellectual property rights. Owning the intellectual property gives DOMS greater control over product development, branding strategies, and future innovation under the Reynolds name. The company has also executed several ancillary agreements alongside the acquisition. These include an intellectual property assignment agreement, a supply agreement, and a license agreement with the sellers. One particularly noteworthy arrangement is the supply agreement under which Reynolds Pens India will continue supplying pen tips to DOMS. This ensures continuity in manufacturing while reducing the risk of supply chain disruptions during the transition period. Maintaining stable component supplies is especially important in the writing instruments business, where product consistency and quality play a major role in customer loyalty. A smooth transition can help DOMS integrate the acquired operations without affecting production. The company has also confirmed that there have been no material changes to the original transaction terms announced earlier. This provides clarity to investors and indicates that the acquisition has progressed largely as planned. For investors, the biggest question is how this acquisition could impact DOMS' long-term growth. While the immediate financial contribution may depend on integration and execution, the strategic benefits could become visible over the coming years. DOMS has steadily transformed itself from a domestic stationery manufacturer into one of India's fastest-growing branded stationery companies. The company has expanded across pencils, notebooks, art materials, office supplies, and educational products. Adding Reynolds further strengthens its portfolio in the premium writing instruments segment. This gives DOMS an opportunity to cater to a wider customer base across different price points and product categories. Cross-selling opportunities could also emerge as DOMS leverages its existing distribution network. Retailers already stocking DOMS products may increase Reynolds availability, while Reynolds' established presence can help strengthen overall shelf space. The acquisition may also improve manufacturing efficiencies by combining procurement, production planning, and distribution across multiple product lines. Such operational synergies often create long-term cost advantages. Competition in India's stationery industry has intensified over recent years, with both domestic and international brands competing aggressively. Such operational synergies often create long-term cost advantages. Competition in India's stationery industry has intensified over recent years, with both domestic and international brands competing aggressively. Strengthening the product portfolio through acquisitions can therefore provide a meaningful competitive advantage. The Reynolds brand also offers international recognition, which could support DOMS' ambitions beyond the domestic market. If managed effectively, the company may be able to expand Reynolds branded products into additional export markets over time. Although integration always carries execution risks, DOMS has demonstrated consistent operational growth over the past several years. Investors will closely monitor how successfully the company integrates the Reynolds business while maintaining profitability. Management's ability to revive, expand and modernize the Reynolds product portfolio will be an important factor in determining the acquisition's long-term success. Product innovation, stronger distribution and effective marketing could unlock additional growth opportunities. Overall, the completion of the Reynolds acquisition represents much more than a routine corporate transaction. It strengthens DOMS' position in India's writing instruments market and adds one of the country's most recognizable stationery brands to its expanding portfolio. If the integration progresses smoothly and management successfully leverages the Reynolds brand, this acquisition could become an important driver of DOMS Industries' growth over the coming years.